Gupta, Chairman and MD at Havells India, on the show right now. Anil, hi, morning. Channel checks have been suggesting that demand was clearly weak in the June quarter for some of the players. Is that the case now as well? And is that what you foresee as a trend for July too?
Well, first of all, glad to be on the show. The 62% growth that you talked about is on a disrupted base. We had last year the second wave of COVID during the first quarter. So, but I would still say that the growth has been solid. And since last 1 year or so, since the second wave, the demand has been solid, both in the consumer sector and the industrial infrastructure. However, this entire period saw a lot of fluctuation in raw material, mostly on the rise, and over, I would say, the last 1 year or so, almost some of the commodities have gone up by almost 30%. And to some extent, we saw some delay in purchases during the second half of this last quarter. And so could have, the growth could have even been better on this disrupted base. We are seeing some, I would say, I would not say a slowdown, but a little bit of delayed purchases by both the consumer and industrial infrastructure sector due to the high inflation. We are seeing some respite in the raw materials, especially in the month of June, and which augurs well for the demand to come back very soon. And hopefully in the next 1 or 2 months, things should come back to normal.
Right. Anil, also this is the third consecutive quarter of an EBIT loss for Lloyd. What is the main reason for this, and when is it that you see things turning around?
Yeah, I think as far as Lloyd is concerned, we all know that the entire industry was coming back, looking forward to this season because of the two disrupted seasons in the last 2 years. And Lloyd in particular had, seen a big change since the pre-COVID times, because we had invested in plant and machinery, which actually made every product made in-house rather than depending upon imports. We had invested a lot in brand building, and we continue to do so. So there was, looking forward to the fact that we want to come back and gain market shares during this period. And during the last 1 year or so, as I said, that the certain raw material prices went up almost by 25 to 30%. And that also meant that the industry as well as Lloyd were not able to pass on the entire cost to the consumer, because that could have disrupted some demand scenario in the coming season time, which was again big season expectation after 2 years. So I believe with raw materials coming back to normal, hopefully in the coming times the margins should go up and hence lead to profitability in Lloyd. However, I must say that we are looking in for Lloyd as a long-term investment. Even in this quarter, most of the EBIT loss is contributed by the fact that we had high amount of advertising, and our focus will continue to remain on distribution and brand building.
Good morning, Mr. Gupta. This is Nayantara joining in. Now, when we go through the fine print as well, what we see is a sharp contraction in the cable and wiring margins, whereas industry peers have reported a margin expansion. What went wrong?
Well, cable and wire generally is a very stable business in terms of margins, but is marred by sometimes very high fluctuations. As I said, in the second half of the quarter, there was a massive reduction in the raw materials like copper and aluminum, which led to some sort of inventory adjustment in terms of costing, and hence led to contraction in margins. I think we believe because of the inventories in the system, this will continue for the next 1 or 2 months and hopefully should come back to normal margin levels very soon.
Mr. Gupta, the quarter that's gone by, I'd like to move beyond that. What we started to see, particularly end June, and the trend is continuing, prices of aluminium, copper declining sharply. How will that impact your margins? What will be the benefit to your margins? And when will you pass on the benefit to consumers as
well? Business to business, it differs. But I would say that, sudden contraction in raw material prices also leads to some short-term pain, but it is very good for the long-term prospects for the business, because that actually means sustainable expansion in margins. So yes, in each business, whether it is consumer durables, Lloyd, cables and wires, and switchgear, we definitely hope to regain our past margins in the next 1 or 2 quarters.
And given that, Polycab had highlighted that they have seen strong demand in tier 2 and 3 cities, what is the demand like for you in smaller towns?
I would say that in the last 1 year, the small towns, rural, continue to do well. But what the difference was in the last 1 year, which was that even the larger cities, the industrial and infrastructure demand was rising, which we had not seen over the last few years. The construction cycle was not very good. The capex cycle was not great. So in the last 1 year, things have actually been, I would say, quite well distributed in terms of demand. I hope this continues. As I said, there was a little bit of slowdown because of the high inflation, but I hope this continues in the coming time with the raw material increases abating.
Thank you so much for sharing with us the outlook on the quarterly performance as well as